Ira Epstein with your metals market wrap-up, and this is for Monday, September 30th, 2019, after 4:30 p.m. Central Daylight Time. Let me start off by wishing one and all, those of you that are Jewish and our viewers and friends, a very happy New Year. That impacted the market today with lighter than normal volume. A certain element of the Jewish religion, those that are more religious, will have tomorrow off as well. And then by Wednesday, they're back into the marketplace. But it is the Jewish New Year. I don't even know the year, but it's way up there. When you take a look at what's going on with the metal markets, still downslope in them. In fact, near the lows as the market went into a washout phase. Now, we've come down in silver almost $2 an ounce. I mean, it's quite a bit that it's dropped down here. I'd be watching to see where it starts to grab traction. I'm guessing the 1450 area could be stretching it in the gold, but it seems to be a common number people are looking at. Look at how the energy market fell apart. Once you heard today, and the Saudis were right, they said that they've got their production back up to where it was pre the drone attack. Well, you took $2 out of these markets. You do realize you're down about $10 a barrel from that spike day when we heard about the attacks. This was a crazy month. September was a month that if you had told people about impeachment, if you're telling people about drone attacks, I can go on and on down the list. Would you have assumed that the metals would not see a safe haven bid? They fell apart. Would you assume that energies would fall apart in that news and the stock market keeps going up? I doubt it. Now, we keep hearing that October is a terrible month for stocks. That's not reality. What reality is you had a big crash in 1929. You had Black Monday in 1987. When you remove that, more times than not, October is actually a pretty good month for the market. When we look at a weekly area chart of closes, you can see you're in a down thrust. You finished off here coming from 1526 down to the close today, $60 lower roughly at 1465.70. You've broken out through this bottom line that I was concerned about, and that could mean that there's more pain yet to be felt. Sometimes you hit these numbers and you get a bounce, but you'd have to get way over this 1540 level to get people to believe that they should have more courage on the long side. What you've done now is in one swoop gone from 1543 down to today's low in the D's of 1470, so you've got a break here of $70 in round figures. Where's the market? Well, it's still staying under the 18-week average, so the bias stays down. A potential support zone could be the 100-day moving average. The Bollinger Band you actually went down to today and closed under it. I would not be surprised, since the first challenge of that the market tries to get back over it. That number tomorrow is going to probably be around the 1480, 82 level as it slips a little bit tomorrow. Momentum oversold. So I'm looking at a market that's given up this 1560 level, down $90. Didn't pay attention to what a lot of traders thought was going to happen and caught a group, and that's why you've got such a big straight down line. When we come to GLD, it's pretty much the same, but an uglier chart pattern. When you took out, I'm going to come back here and come back to this. Here we go. This was when the problem happened. You had an outside day up, actually beginning here. You took out that, and that set up the potential for the Bollinger Band, and it went there finally today. So it's met that potential. Remember, when you take out the low of an outside day that's up, if you're underneath the 18 or the 100-day average, what it does, it's, in this case you were over the 100, but under the 18, it sets up a challenge of the nearest of one of those averages on the downside or the Bollinger Band. That's what happened in this chart. GDX, same type of chart pattern. I'm going to come back into it. Don't know why that's doing it. Let's see, there we are. Here was your outside day up. Now in this case, I would be looking for the 18-day average. This is the rest of the gravy on this break as the market just let go to the downside, and it's been staying under the 18-day average. It is oversold. I see strong support, short covering at a minimum in this level here. Doesn't mean I'm right, but that's what I'd expect to see. Resistance back at 27.99, and the gold-silver ratio blew up today. It wasn't that bad as it was. This was Friday's action, and it wasn't good. You were trying to stop right through here. You didn't do that. So now the next resistance point, if it keeps going, is back up at the 88 level with support around 83.5, 83.75. When you look at silver, you can see how it's gone literally straight down. Went and just missed the Bollinger Band on Friday, went to it today, and at the end of the day, 16.99. I would not be surprised with the oversold condition, the first challenge under it. You know what I say, when you hit the Bollinger Band the first time, be it to the upside or downside, I think pros are taking money off the table. If I'm wrong, the 100-day average at 16.35 comes in play. The resistance is the 18-day average, but there's no trend at work here. In the copper market, you continue to fail against the 18-day average of closes. The market back down. Bollinger Band is the support. You got there the other day, rallied back up today. Just missed the 18-day average by 15 points. Still staying on the weak side. And obviously, you're not going to get a lot of great news during this week where China is celebrating the 70th birthday, if you will, of the Communist Party, and all their financial markets are closed now. The people are on vacation, holiday as we can call it. And of course, then we got to look down the road at October 10th, which is 10 days away. Will this market start anticipating good things coming out of the U.S.-Chinese trade talks, or come October 15th, are the tariffs that are at 25% going to 30%? It can go either way. In the platinum market, you've been in a downtrend and you just accelerated the heck out of it today. Will you get to the 100-day average is the question. The market hit for the first time on Friday the lower Bollinger Band. I would have thought that would have offered some support. It offered nothing. You were down $47 today, breaking out of a sideways pattern, tossing in of the towel. When you come to the palladium market, this is still the strongest market. Now, at some point, what will happen is palladium will have to give something up against the platinum and other spreads. But this market is up as it's used in gasoline, as you know. There's ideas of shortages coming out of South Africa, Russia, where it's mined. Those are part and parcel behind it. I look at it more important that you're knocking on the door of the upper Bollinger Band and everything's falling around it. That's not reason to be bearish. It's reason to be cautious. Those that moved out of gold, silver, the platinum might have moved into this market for all I know. I was reading a report on that. It doesn't make a lot of sense to me. I just keep my eye on what the slow stochastic does. As long as it stays embedded, I expect the pros to buy on the pullbacks. When that's lost, I look for a challenge of the 18-day average of closes. In the dollar index, look at how you just stay here. And it's a neat market in the sense that on Friday, the market finished off at the just over that upper Bollinger Band, keeps hitting it back and forth in here. Now, how many days do we have over it? You're over it today. On Friday, this market finished over at 98.76, the top Bollinger Band. 98.66 was the number on, that would have been Thursday. So that's 3 days. And on Friday, the market was over it. Guess what I give the percentage of being over it tomorrow? 1%. So I think 99% probability the market's going to try back into the Bollinger Band. That's not bearish. This market's in a bull play, but it only stays outside of those bands 5% of the time. I think the pros took their first money off the table when it got here, but it is showing something different. Each time it's gotten over, like it did here, it quickly pulled back under. It's doing it different this time. So there's a huge difference between wanting to be short and taking money off the table. You are overbought. You're at an extreme point on the Bollinger Band. That's not reason to be bearish. It might be reason that people are cutting back on their bets on that. We talk about technicals, we talk about fundamentals in our Linn research, and we cover a whole category of commodities. Now, our clientele decide which one of these categories. They can have all of them, or they can decide which ones are of interest. We write news probably 7 days a week. So it could be on a Saturday, it can be on a Sunday. You're still getting news reports from us. Especially if there's a world event, you want to know about it, and we cover it. We really start covering it in a lot more detail on Sundays. Saturday's not an off day, but it is a day that we cut back how much we write. But because the markets are open on Sunday night, you need something in your hands. we offer it. We cover the options market, the futures. We cover what the hedgers are doing, what we think the specs are doing. If you're looking for the CFTC reports, they're all there. How do you get access to this for a limited time if you're not a subscriber to my research or not a trading account of ours? Well, we'd like to put it in your hands for a short period, 10 days or so, business days. Give us a call. Or go to our website, sign up in our free offers. You can see our other free offers there too. Click on it. You can click up here and we'll put that in your hand as well. I'm going to be starting to do this week, I hope, another series of video reports, special reports. We'll talk about that once I'm at that point. You have a great day and I'll see you all tomorrow.